and we're going to kick things off. I welcome everybody to our Supplier Payment Virtual Card webinar, our executive briefing as we've called it. My name's Doug Seaberg. I'm the Director of Business Development here at Store Financial. Helping me facilitate today is Ryan Eason. He's going to be driving the facilitation side of this, and he's our Director of Supplier Enablement here at Store Financial. Michelle Young, our Director of Marketing, is also in the room here, and we're looking forward to going through an interesting, what we hope will be an interesting and informative presentation for you today. So today's presentation on supplier payment optimization with virtual cards, we're going to cover a few things. Our agenda will start with, what are some of the evolutions in the payments industry? Where have we been? Where are we at today? And talk a little bit about where we're headed and really why are we doing this? Why are we holding this call today? And what is a virtual card? How would it benefit both you as a buyer, or if we have any suppliers on the phone, on the call, what exactly is it? What are the benefits of using a virtual card to make invoice payments? And then finally, we'll cover how it works. What are the schematics behind how a virtual card payment program works? And we'll talk a little bit about how Store Financial may have some differentiation behind some of the other virtual card programs that might be out there. And then at the end, we'll buffer some time, make sure we have some time for Q&A and some takeaways. So where has the industry been? So if you look back on the chart there on the left, in 2004, 80% of B2B payments in 2004 were in the form of check. Now, fast forward here to 2015, you see that the payment mix has gone down, but where we've come in that short of period of time, we still have a long way to go. The payment mix that we still see today is nearly half of B2B payments are still being made with check. And we're going to talk about why the use of checks to pay invoices is many times the most expensive thing that you would have as far as the cost. So if you add in all the costs of writing a check, everything from the paper to the postage, you can imagine it might be a fairly expensive endeavor to write a check. So some of the reasons for this evolution in converting suppliers away from checks to electronic payments. On the left side, you'll see some reasons to adopt an e-payment strategy. One that I've already spoke of is to reduce check and bank costs, reduce fraud control. If you were to write a check, your account number, which is at the bottom of your check, is floating out there for the world to see. I'm sure you've all read articles on fraudsters who've used someone's check in order to benefit themselves. Capitalize on AP automation efforts. There's been a lot of advancements in electronic automation from the accounting side. A lot of investment in the AP side with the use of technology. Working capital improvement, I'll go a little more in depth on that here in our next slide or two. And giving suppliers payment assurance, the old checks in the mail, you've got lag time with postage. Adopting an e-payment strategy could help that payment assurance for your suppliers. And then finally, turning your accounts payable group into a profit center. If you're writing check or utilizing some old-time technology, your AP department's actually costing you, and we're going to give you some ideas on how to turn that center into a profit center. The pie chart on the right side was a survey that was done for buyers. They were asked, what's the likelihood of converting your major suppliers, their payment method, from a check, a physical mail check, to an electronic payment method? And you'll see nearly 75% were either very likely or somewhat likely to accept an electronic payment instead of a check. So those numbers really stand out, that suppliers are ready to take payment methods via electronic, and we'll go into some more in depth on that here in just a second. So let's go into each one of those. Give me just a second here, let my slide populate. So how does virtual card fit in? If you look at your current payment strategy, exactly where might a virtual card fit in? Well, some of the benefits on the left-hand side, that first one that I brought up about reducing check or bank costs, a virtual card costs nothing to send. It's an electronic emailed payment. So there's no plastic, there's no cost, there's no banking information that we gather from your supplier. It's a simple emailed to their receivable department. The fraud control, a virtual card is the lowest fraud amount form of payment that's available. The virtual card number that's issued is only for that specific invoice, and it can't be used for any other purpose. To capitalize on some of the expensive AP automation efforts, the money that you've invested in your ERP, kind of look at this as the last mile of automation, so to speak. This is kind of that last addition to those electronic efforts that you've implemented so far. Working capital improvement, you can improve your forecasting utilizing virtual card, give your suppliers payment assurance by reducing inbound supplier inquiries, and I'll talk about what our supplier portal might look like for your suppliers to log in and see what payments that you've sent them that they've received. And then probably the most important, the number one reason a buying organization would implement a virtual card strategy is to earn a rebate. Turn your accounts payable department into a profit center. Reduce bank costs via check, and then on the positive side, earn revenue in the form of rebates. A poll of suppliers, you might wonder, well, why would suppliers accept a virtual card? Given the nature of a credit card, there's costs that are involved, and the supplier survey that was done, if you look at the very bottom, over 80% of the suppliers answered yes, that they'd likely take a card payment if a buyer or a client mandated it as a method of payment. The number one reason a supplier would accept a payment via card is because they are going to get paid quicker. It's a guaranteed form of payment. You can see that the rest come in much second, third, fourth place to be a preferred supplier. Process ease and improvement, decrease accounts receivable costs, and possibly reduce accounts receivable staff if things are becoming more automated. But the number one reason a supplier would accept a card is for a quick payment, and that's what a virtual card absolutely provides. Next, let's move into what a virtual card is. And our bridge goes from why you should enable a virtual card as part of your payment process, and next we're going to talk about what exactly are the details of it. I want to start though by saying what a virtual card is not. Virtual card is not a P card. Most of you on the phone probably have a corporate purchasing card or a commercial credit card in your wallet right now. A commercial card is used typically for travel and expense, to buy supplies, incidentals, book plane tickets. When we go to trade shows, all of us carry a commercial card in order to make those trips. But a purchasing card is a piece of plastic you carry with you, and typically it comes with a revolving credit facility from either a treasury bank or a credit card institution. So I want to start just by saying what a virtual card is not. Some of the basics behind a virtual card, if you look at the bottom, some of the icons down there, just some basics. A virtual card is a B2B payment using the MasterCard Visa payment network. It's a single-use card for the specific amount sent, and it's sent electronically. It's an emailed form of payment. The single use is tied to the invoice that card is being used to pay. It's virtual. which means it's a 16-digit payment number that's provided to the supplier that they take in and process like they would process any credit card payment today. And it's secure PCI delivery via email, fax, or placing a card in a portal. And Store Financial, as an electronic payments company, is on the cutting edge of PCI delivery. This is what we do, and we do it every day, and we do it very well. So what does it look like when your supplier gets notified that they've received a payment? So the delivery methods, they're notified 3 different ways. Most are delivered via payment notification to a specific email address. Could be accounts receivable at XYZ company. Could be a specific accounts receivable clerk. And for some smaller companies, it just might be the CFO or the bookkeeper. Could be a delivery via a secure portal. Some institutions have a portal that we put a virtual card on, and then we just push money to that card every time a payment for an invoice is being made. And we also offer straight-through processing from start to finish, where it goes directly into a supplier's bank account and there's no touching of an email or anything. So what you're looking at on the right side is an example of an electronic payment notification that would come over via someone's email screen. A couple of things to take a look at. In the middle of the screen is a MasterCard number, and it's the last 10 digits of a 16-digit MasterCard or Visa number. Now, if you remember from the slide before, I said the digits are 16 digits long. Each supplier is given a 6-digit number that's unique to them, and that number is given to them when we enroll them. Our supplier enrollment and Ryan's team enrolls them. They each get a 6-digit number that they plug those first 6 digits in, and then the next 10 digits that come over on the form of this notification. The payment amount that's specific to the invoice or invoices being paid, the expiration date of the card, the security code, and then the remittance advice that's at the bottom is what invoices are being paid, what are the invoice numbers, what are the amounts. All of that remittance data is included in the payment notification. So you might say a virtual card is an extremely smart form of payment because your supplier knows exactly what it is that you're paying them because that remittance advice is listed right there on the email. What are some standard virtual card payment benefits? Some of these stand out that make perfect sense. It's much less costly than issuing checks. Lower security requirements for buyer and supplier. If you think of emailing a credit or a virtual MasterCard number or Visa number to a supplier, you don't need your supplier's bank account information if you're simply emailing them the number. They're taking that number in and they're just processing it as they would process a traditional credit card like they do every single day. It's more secure than plastic with a predefined charge amount per card. The card that's issued, it ties right back in specifically to the invoice being paid. If you are using a P card to pay your suppliers, there's a couple things to consider. P card's typically more expensive than a virtual card, so it's more expensive for your supplier to take. But the risk for you as a buyer, if you're using a P card, your credit card number is floating out there. And remember, that is an open credit card number tied to a revolving credit facility. Someone could take that number, go to Best Buy, buy a big screen TV. So there's some risk involved if you use a purchasing card to pay your invoices. There's no changes required to your current bank or your ERP system. However you do your accounts payable process today through your ERP, you simply export a file, drop it into an FTP or a file transfer protocol, Dropbox for example. We pull that into our system and then we send out the individual cards. And I'll give you a step-by-step on that here in one of our next couple of slides. Eliminates 1099 filing responsibility. The card issuer is responsible for that action. That's what we do for you. Generates rebates and a revenue stream for the buyer organization. Number one reason a buyer wants to do virtual card is to get paid a rebate. We offer the largest rebate in the industry, and I'll go through exactly why I say that here in just a minute. It's accepted by any supplier that currently accepts cards. Very simple process. They process the payment just like they would today. Statement that I made just a second ago that we deliver the highest supplier enrollment levels with the largest total rebate for the buyer organization. A couple of different things. Actually, I want to start with the second icon. The number one reason that we state that we deliver the highest enrollment levels is we have a team, Ryan leads that team, that delivers a customized supplier enrollment program for your vendors. We partner with you in order to enroll the highest number of suppliers that we can. The more suppliers we enroll, the more virtual cards you can issue, the higher your rebate. We also offer a ladder of rate flexibility with your larger suppliers. So if you have a larger supplier that needs a less expensive form of virtual card, we have the ability to do that. Now, of course, we need to work with you as a buyer, because if we are offering a less expensive card, that means your rebate potentially could drop, and we want to work with you if we're going to issue those lower cost cards. It's the most secure form of B2B payment that there is. That card can only be used to pay a specific invoice. And we also have an ongoing supplier support for all your virtual card payments. So if you think about that pie at the beginning of my presentation and where virtual card might fit in around check and ACH and wire, our goal as a supplier enrollment team is to enroll as many suppliers as possible. And we are going to continue to work with your suppliers in order to enroll as many as we can. So it's not a first blush and one and done. It's a continuous process. An important piece on supplier support. As Store Financial, as our customer service group and Ryan's team enroll your suppliers, I want to make an important point, and if I've said this before, I should repeat it if I've already said it. Most virtual card programs that are issued by treasury banks are going to have your accounts payable department enroll your suppliers. And quite often that's where a virtual card program could fall flat on its face, because an accounts payable person has other things to do than to enroll suppliers. So that's what our job is as a partner for you and your firm. Transparent pricing. This is on the next slide. We provide transparent rebate pricing back to you as a buyer organization, and I'll go through some examples in the math behind how you earn a rebate using virtual card. So if you've got a piece of paper, I want to cover the top 2 reasons a buyer would benefit from a virtual card. Number 1's a rebate. Number 2 is to lower your bank costs. Benefits for a vendor, there's really 3. It's more convenient, faster processing for them, saves them time and money, and it's going to give them rich payment details through that remittance of that email. Here's the rebate calculation. Give you an example of how rebate is generated and passed to you as a buyer organization. A little information on interchange. Rates can depend on a lot of different factors, including transaction size, merchant acquire, even the supplier that you're paying is receiving your payment. We're actually going to have an executive briefing on interchange here within the next couple of months, so keep your eye out for that if that's an interest to you. Store Financial offers a straight revenue share. It's always based on the net interchange. There's no tiers to hit, no minimums, no base rates or large ticket assumptions, and then lastly, your rebate is paid every month. So take advantage of that rebate cycle as you look at the example on the right. So here's an example of a net interchange at a card that's running at 2.65%, and this client has a client share of 70% of the revenue that's coming in. So this buying organization spends $100 million, back out the network fees, 70% at 175 is $1.75 million for using virtual card to pay their suppliers. So the last piece of the puzzle is how this works. Our supplier enrollment that I've touched on earlier, it's a very customized campaign. It's really a full service program. The buyer branded collateral that we offer has your buying organization's logo, would have our logo, really whatever you're comfortable with to send out to your supplier. Our supplier enrollment team handles the physical email out of the introductional letter. We also make phone calls. There are a range of offers that are customizable for each campaign. And then, of course, it's ongoing supplier support to enroll those suppliers as we move forward. Your suppliers also have access to a portal at which they can log into in order to see their volume and their activity, which again helps your accounts payable department reduce the number of inbound calls you have from an accounts receivable group for your vendor wondering where their payment's been, and they can simply log into the portal in order to see what cards have been sent and redeemed. So the process itself, how it works, if you read this from left to right, as a buying organization, you send Store Financial a payment file, and inside that file, it could have as many invoices as you're wanting to pay on that payment run. Could be anywhere from 5 to 5,000, doesn't matter. The number that you send us is, the number doesn't matter. You send us the payment file with the invoices and the funds. We then send payment notifications to the suppliers via email. The suppliers retrieve those payment numbers off the email and then process that payment just like they would process a credit card today, whether it's simply clicking something within their ERP or running it through a credit card terminal. Then we send a reconciliation file back to you as a buyer organization, so you'll know what's been reconciled and the amounts. And then finally, we send the rebate back to you based on the amounts that we've collected during that month. So some of you may be wondering, how to get started on this. What's the process to get going? It's fairly simple. Number one, there's no upfront cost to you as a buyer organization to have us analyze your supplier list. If you have not done this recently, we would welcome the opportunity to provide you with an audit or an analysis of your current supplier spend. I'll give you a template you can use, or you can simply export it out of your ERP. It's simply your supplier's name, information, how much you've paid, perhaps payment terms, and number of payments. And then we'll come back to you with a proposal based on the amount of volume that we're looking at from your supplier list. It would include who you're paying with check, what are an estimated check costs for all of those suppliers that you're paying. We would then move forward with an engagement agreement, and then we would figure out, okay, how are we going to roll out our enrollment campaign to those suppliers. Again, no upfront cost to you as a buying organization. Store Financial as a company, card payment since 2004 as an electronic payments company. We manage 650 private label programs, issuing 4 currencies. We have a customer support group 24/7 in English and in French and Spanish. It's not listed on there, but we have Spanish-speaking customer service reps as well. And we process about $2 billion in B2B payments. So this is what we do. We have some valued clients. The logo's listed on the right, Harley-Davidson, AT&T, and Shell. And the customer support process through all of this is again, very customized. This is what we do as a company. My information's down there at the bottom here at this, the last part of this slide. Feel free to reach out to me via my office cell or email. You can also reach me through LinkedIn or any of those other social medias. So I'm going to pause just a quick second. If you haven't submitted a question to Ryan, why don't you go ahead and do that now? And I'm going to pause just a quick second. All right, one of the questions that came up was, can we aggregate multiple payments to one supplier? And absolutely we can. If you have multiple invoices to be paid to one supplier, that's the great piece about that remittance data on that email. We'll list out all of the specific invoices that payment's making for those multiple invoices. Anything else? All right, we got one more. So can we handle checks? Whatever method that you would have to pay your suppliers, of course, the number one thing that we would want to do is convert those suppliers from check to virtual card. But yes, we would absolutely be able to handle check payments, and we would partner with a third party in order to facilitate that. So whatever payment method that you would have within the file that you'd export and send to us, we would be able to help you facilitate that. So whether it's ACH, check, again, we want to maximize the number of suppliers that are enrolled in virtual card. And if you haven't analyzed your list, I'd encourage you to do that. One thing that really surprises us at Store Financial is we begin making these supplier enrollment, we report back to the buying organizations, and they are surprised and actually shocked that the number of suppliers that they are currently paying with check, who we come back and say, did you know they are set up to receive credit card payment? They do receive card as payment. It could have been as simple as the buying organization didn't have the technology or a partnership in order to pay via card. Our job is to get suppliers who don't take card to take card. Okay. Yeah, so line of credit, it's a good question. The payment file that you send us, you also send us the payment total for all of those invoices. So there is no line of credit attached to the payment itself. All right, well, it's right at 1:30. If there are any additional questions, feel free to reach out to me. Feel free to email or call, and I appreciate everyone's time on the webinar today. Take care.